Hello and welcome to LAT's Weekly Market Insights. The troubles of Chinese conglomerate Evergrande have dominated headline once again after it warns that it could default on its astronomical debt. Experts have characterized the firm's struggles as a major test for Beijing, but risks turning into the Chinese Lehman Brothers moment, sending shockwaves across the world's second biggest economy. There is still no word from Evergrande on its $83 million coupon repayment that is due now. With them dominating the headlines like this and moving the markets, who are they? Evergrande is one of China's largest real estate developers. The company is part of the Global 500, meaning that it is also one of the world's biggest businesses by revenue alone. Listed in Hong Kong and based in the southern Chinese city of Shenzhen, it employs around 200,000 people. It's also indirectly responsible to help sustain more than 3.8 million jobs each year. In recent years, Evergrande's debt ballooned as it's borrowed to finance its various pursuits. The group has gained infamy for all the wrong reasons. It's become China's most indebted developer with more than $300 billion worth of liabilities. After the last few weeks, it's warned investors of cash flow issues, saying that it could be at risk of default if it's unable to raise more money quickly. In some ways, the company's aggressive ambitions is what's landed it in hot water, according to experts. The group has strayed far from its core business, which is part of how it's got itself into this mess. This coming from Matti Bekink, who's the Chinese Director of Economic Intelligence Unit. These pursuits include projects such as a $1.7 billion football stadium shaped as a giant lotus flower, which, should it be completed, will be able to see 100,000 spectators. Evergrande said Wednesday in filing with the Shenzhen Stock Exchange that issues regarding a payment on a domestic yuan bond have been settled through negotiations. The amount of interest it owes on the bond is around $36 million, according to the data from Refinitiv. Now, despite this repayment, which may placate some investors, many questions still remain unanswered. Evergrande did not elaborate on the terms of the payment, and in its statement, an interest with $83.5 million on a dollar-denominated bond is also due. The interest repayments don't stop there. We can see from the graphic on my screen here, there's still a $669 million worth of coupon repayments remaining this year, with a similar value pushed into 2022, with it slowly declining in 2023 and into 2024. Whilst the full extent of the Evergrande is yet to be determined, the European Central Bank and major banks have rushed to try and reinsure investors. European Central Bank President Christine Lagarde believed Europe's direct exposure to the embattled Chinese property company Evergrande would be limited. There's still a lot to unfold here with Evergrande, where we see the full extent of the potential damage. Is this going to be a contagion? Is there going to be a direct impact on European and US markets? Both Christine Lagarde and Jerome Powell for now have rushed to the cameras to try and reassure investors that their exposure is limited and there won't be a knock-on effect. Also in line with this, of course, we had the Federal Reserve this week. Jerome Powell was in action and it was all eyes towards the dot plot. If we bring up the dot plot from this September meeting, we can see that broad shift and now pretty much an equal distribution and an even split for those which suggest there will be a rate hike in 2022 and those who believe it will remain unchanged. The median projection indicated no rate increases until 2023. The Fed on Wednesday kept its benchmark rate on hold for the 12th straight meeting after sweeping into emergency action amid the coronavirus pandemic back in March of last year. Now let's not forget, we also had the Bank of England here on home soil. They left the door open to an increase in interest rates as early as November, a spike in energy prices and that direct risk of a jump in inflation. Most policymakers agreed future tightening should first start with a rate increase, even if that does come before bond purchasing programs expire at around the end of the year. This is part of a more hawkish turn from a bunch of central banks now, but also spans the US Federal Reserve, leaving the European Central Bank looking lonelier than ever on its current monetary policy stance. Now let's come across now to those US indices, and we'll bring the S&P into focus and see what the impact has been, not only from Evergrande, but also from that more hawkish Fed and Jerome Powell. The initial response for the start of the week was some aggressive selling pressure, which brought us down to that 4350 region, which is also in line with the higher low from this major uptrend. That higher low here failing to break, we failed to see a close through that, but a significant moment. The 50-period moving average, which had been a lifeline for buyers through this market, has been broken, and interestingly now is being retested and acting as resistance. We can see the buying power that came in numerous times as we tested this 50-period moving average. Fascinating to see now as this story develops. For now at least, markets and the indices are taking the Evergrande news in its stride and allowing these markets to bounce back. If we hold down below this 50-period moving average now and we see a break through these lows, that could be the early warnings and the signs of a larger move. As it sits for now, Evergrande continues its march lower, having shaved 80% of its value over the course of this year. The S&P holds steady with a slight correction and pullback early this morning. That is all from us this week. Please do join us same time next week.